planned for today's webinar, where we've actually brought in our own internal questies. Actually, 3 of our transaction supervisors are here with us today, and we are going to be going through several of our most frequently asked questions when it comes to funding investments with your IRA. So today's class, as well as all of our other classes that we teach here at Quest, will be available for replay both on our Facebook page and our YouTube page. And I do actually have Evan Reeves, one of our other IRA specialists, here with us moderating today's event. So be sure throughout these announcements, check out the chat. We'll be posting some links there to our upcoming events, our YouTube channel. At Quest, we have a lot of great resources for you guys here, and as you'll kind of see, all of our staff is very highly educated when it comes to all things self-directed IRAs, rules, regulations. So hopefully today helps to answer some of your questions that you may have, but definitely if you have more questions or if you are interested in setting up a free consultation with one of our IRA specialists, reach out to us. Evan will put our contact information down there in the chat. And before we get started, I do just have a couple of quick announcements for you guys. Be sure to check out our other upcoming events. This Saturday, we actually have our Self-Directed IRA Saturday series with Sean Casterline. Sean Casterline is from Tuscan Gardens Senior Living, and he will be giving a presentation over how investing in senior assisted living kind of works, how it processes, and where senior living investments are going in 2021 and beyond in the future. So be sure to join us this Saturday at 12 p.m. Central Time for that event. And I would encourage you guys, let's make this event interactive. If you have questions for our 3 panelists throughout the presentation, be sure to send them to us either in the chat or the Q&A box, and we'll get your questions answered for anyone here who's watching live. Now, let's go ahead and get started. I have with us today Alexis Ledbetter from our Private Entities Department, Lee Rander Grays from our Real Estate Department, and Kathleen Sue from our Notes team. Gosh, guys, sorry. Try to keep it all straight sometimes. But let's go ahead and let you guys each introduce yourselves. Alexis, we'll go with you first. Go ahead and unmute yourself and take a second to introduce yourself to everyone. Let them know kind of what you do here at Quest, how long you've been with us, and kind of how you've gotten to where you are here today.
Hi, everyone. So as Haley mentioned, my name is Alexis Ledbetter. I am currently the Private Entity Supervisor. I've been with Quest for close to 2 years now. I think I'm just shy by a month or 2. So most of my time here, I have been working in private entities. I did actually work in the Notes department shortly. So I have some experience there and hopefully will train up in real estate as well. But it's been a really fun journey, learning a lot here at Quest and kind of just working up to my position now as supervisor, and hopefully it'll be several more years to go.
Yes, and actually that new position as supervisor of our private entities team is a new recent promotion. So everyone out there, if you've worked with Alexis, she's awesome. She's really moved up quite a bit in your short time here. So kind of excited to see what you have for us today and where you plan on going after this. Next up, Kathleen, are you ready to go ahead and introduce yourself? Let us know how long you've been at Quest, what you do here, and I know I see you're working from home today, but that's all right. It's 2021. It's pretty much what we all do now anyways. But Kathleen, go ahead and unmute yourself and introduce yourself to everyone.
Alrighty, my name's Kathleen. I've been here for about 4 years here at Quest. I've worked in several departments. I've worked in real estate, notes. I've worked in our back end with special services, quality control. So I've kind of been all around the company a little bit, which kind of gives me like an insight of how everything works all around, which is kind of helpful with getting things processed, moving along, knowing the speed bumps that everyone's going to go through. So I was promoted to Notes supervisor, I believe last year sometime. So if you guys have any questions about notes or, transactions, feel free to just let me know. Give me a holler.
Awesome, Kathleen. Super excited to have you here today. I know you've done these panels with us before, so again, lots of great information to offer here. And last but not least, Mr. Lee Rander Grays. Lee Rander has been in our real estate department for quite a while. Go ahead and take a minute to introduce yourself to everyone, kind of let them know how long you've been at Quest and how you've gotten to where you are today.
Awesome. Well, good afternoon, everyone. Again, my name is Lee Rander Grays. And so when I initially started here at Quest, I started off in our accounts payable team. And so from there, working in accounts payable for a little bit there, I moved on to real estate, and now I'm the real estate supervisor. Definitely here to help if you guys have any other additional questions, but let's have a little bit of fun today.
Yes, definitely. And it's really fun when we get to bring in these internal panels because, you know, you actually get to see and hear a lot of the inner workings of our most frequently asked questions that we get here at Quest. But we actually do already have a question from one of our attendees, and I think that this is a great way to start out the panel is let's have each of you just give a quick, brief rundown of what's the difference between real estate, private entities, notes? What do we actually mean when we're saying this? Alexis, could you take a quick minute to break down what exactly a private entity investment is here at Quest?
Sure. So typically our main investments that we see here in private entities that we process would be, investments into LLCs, limited partnerships, joint ventures, trusts, and kind of those everything else. So things that aren't promissory notes or real estate. So say like a mobile home purchase or, purchasing a tractor, something that's just one of those other types of investments. That's what private entities is going to be dealing with.
Yeah, so we see that quite a bit because a lot of people like to be completely passive with their IRAs, which is also why we see a lot of note investments. Kathleen, could you take a quick minute to walk us through what is a note investment? What do we mean by that here at Quest?
Yeah, for sure. So notes investments, essentially what our clients does is they use their IRAs as the lender. So anytime, there is a borrower in needs of like funds, essentially our client's IRA will act as the lender and they will lend money from their account using a form of a promissory note. So that's why we call it the notes department. Anytime you want to lend money, that's who you would be working with.
Yes, and I will also add that a lot of our clients use their IRAs to purchase existing notes. So whether you're being a private lender, purchasing an existing note, we can do any of that here at Quest, and that all does go through our notes team. Now, what's pretty funny is, every time we get a new client call in and they're like, hey, I want to self-direct my IRA, and we always ask, okay, perfect. What would you like to invest in? They always say real estate. I'm like, okay. What type of real estate? As you guys see, we have 3 different departments here, but Lee Rander actually here from our real estate team. What do we actually mean when it comes to the real estate transactions department here at Quest?
Sure. So I guess that the big thing to kind of think about, guys, is your IRA taking title to the property? That's the common question that we'll ask. So specifically what we deal with in real estate is where your IRA is going to be on that warranty deed. It's on the title to the actual property. So here at Quest, you could take title to the property in, say, an entity, which would be our private entities team. So just think about that. The contract itself will be in the name of your IRA and things of that nature. So that's typically what we do.
Yeah, so real estate would be anything like owning rental properties, owning raw land in the IRA. Like Lee said, it's your IRA is actually holding title to that property. Now, again, if you guys that are watching this out there have any questions for our transactions panelists, be sure to send them to the chat or the Q&A box. As I see them come in, we'll get them answered for all of you who are watching live with us right now. But let's go ahead and get right into the questions that I've prepared for today. Kathleen, I want to start out with one of our really common questions that we get with notes. If you guys out there probably don't know this, but about almost half of the transactions that we fund at Quest are some sort of promissory note. So Kathleen, you'll hear us say that you can either loan out your funds either secured or unsecured. What is the difference between a secured and unsecured note? And in these cases, what happens if my borrower stops paying?
Okay, so essentially the biggest difference between unsecured and secured note is collateral. Does your funds have any type of collateral? And does the structure of your investment have any type of collateral? So if you have lent out funds based upon your promissory notes. If your borrower happens to default for any reason, do you have any rights to any type of collateral? It doesn't necessarily have to be land. However, if it is land, that's what we call a secured note. If there's no type of collateral, essentially what your options would be is you would have to pursue the borrower, right? Personally, and you would have to take legal action against that, and that'll be a whole process that you would actually potentially have to get like an attorney if you're not 100% familiar on how that works. So the other option that you will run into with unsecured notes is if the borrower stops paying, you would have to go through a zero value process with our special services team. Essentially what you're doing is you're devaluing the asset, letting us know it's uncollectible, which will require additional documentation. It will require a letter from an attorney, and our special services team would be able to assist with that. Mm-hmm. As far as secured notes go, it's a little bit different just because there is collateral. So documentation is a little bit different. Depending on what type of security you're going to have, what type of collateral you're going to have, the documentation that will require is going to be different. It'll be based upon exactly what type of collateral you want to put on that note, and then we will ask for the corresponding supporting documentation. The most that we're going to run into is notes secured by real estate, which essentially in most counties and states, it's going to be either a mortgage, a deed of trust, or a land contract of some sort that allows us to be able to put a lien on that position in the name of the IRA. And in that sense, if a borrower happens to default on that, there are a few different types of recourses for that. You can either foreclose on the property that you have a lien against, which essentially you would then work with our real estate team in converting that investment from a note investment to a real estate investment, and you'll hold the actual property versus holding the note because now you foreclosed. The other options, again, you can still pursue them. You can pursue them personally. You can also devalue it. However, that would be a little bit different of a process that you'll work with our special services team as well. So anytime that comes across, and it's a bad investment, let us know. We'll definitely reach out and help you guys out and let you guys know what the proper procedures are on our end in order to get that investment devalued or taken care of for you guys, so that you guys are definitely still getting the most out of your investments.
Mm-hmm. Yes, and I love this question because I think it's such a great way to start off, because it's really important to note the roles between you as the IRA client and Quest as the custodian to your IRA. We can't really tell you how to structure your deal. Our clients loan out funds secured and unsecured, pretty much all day long. But you do want to make sure that you understand the difference between when an investment is secured and does have collateral versus maybe if it's just a promissory note with no collateral actually tied to it. One of those investments might be just a little bit riskier than the other one. But give us a call, talk to an IRA specialist, talk to our transactions team. We can walk you through the difference between the different types of investments, but ultimately it does come down to you making sure that you have taken these precautions because, like Kathleen said, we can zero value investments. It happens, life happens. We don't like to do it, but it is something that is potentially avoidable if you kind of go through these proper steps in the beginning of your investment. So great answer there, Kathleen. We actually have a question from one of our attendees, Christopher French, also one of our regulars at our happy hours that we host. Lee Rander, I'm going to direct this one towards you. Christopher wants to know, a seller has an underwater house that they are willing to give away. Underwater, as in I guess they just can't pay for it anymore. Doesn't sound like it's physically underwater. But a seller has an underwater house that they are willing to give away. Can a self-directed IRA accept a property for no consideration? Great question, Christopher.
Gotcha. So the quick answer to that is definitely your IRA would have to make some sort of consideration to purchase a property in your IRA. Now, if the question is can your IRA purchase property subject to the existing mortgage, which I assume they are, behind on some sort of mortgage payments, or in fact, you're catching up the taxes. So maybe we can talk a little bit more about that specific deal. But the answer to that is your IRA would in fact have to make some sort of consideration.
Yeah, so some consideration, it sounds like if they're willing to give it away, they'd probably take some money for it as well. But yes, all right, guys, I can see your questions coming through here. Some of them are a little long, so we're going to do one of these first. Alexis, I'm going to direct this one towards you. So dealing with private entities, let's see. Can I invest my own money as well as retirement money into an LLC? If yes, how should this reflect on the agreements?
So yes, you can. However, when you are using your own personal funds as well as your IRA funds to invest into an LLC, they're going to actually be treated as two separate investments. So for instance, when you are investing in an LLC, the documents that we often see for this investment is going to be a company agreement, a subscription agreement, and then also our purchase packet for private entities, which is our internal document. So you will actually have your own company agreement and subscription agreement for your investment personally, as well as a whole separate company agreement and subscription agreement for your investment with your IRA. So those will not actually be showing as partnering directly. It's just going to be two separate investments into that LLC.
Yes, and I love this designation here because private entities and passive investments into like operating agreements, subscription agreements, that's really the only type of investment where each IRA account or each individual in that deal actually needs its own set of investment documents. Kathleen, do we ever see people partner their IRAs to be private lenders? If so, how does this differ from maybe what Alexis just explained with private entity investments?
Yeah, we see it almost every day, if not every day. A lot of our clients partner with other IRAs, other lenders, even themselves personally. They will partner with their own personal funds to lend out money, which is absolutely okay. It's not prohibited. You are on what we call the same side of the fence. You're all on the lending side. So you can absolutely partner together and fund deals and lend money. The biggest difference between partnering with IRAs and other lenders and investing into an LLC is that the note in itself and any security or collaterals that go along with that note is in the name of the lenders themselves. It is not in the name of an LLC. It is not in the name of a trust or anything like that. It specifically lists out John Doe and who else? Let's just use Christopher French since he was just here, as lenders, and it will list the same people as the secured parties in any of the collateral that's mentioned. So that's honestly the biggest difference is just your IRA and your name is specifically listed versus an entity that's listed on those documentation.
Yes, exactly. And we actually see this pretty commonly, especially with promissory notes, because, the reality of it is most families do not have all of their retirement funds in one IRA account. It might be where maybe the husband has a Roth IRA, maybe an old 401k, maybe the wife has a health savings account. So we do see a lot of people that choose to partner their IRA funds together. And whenever you do this, basically the lender, as Kathleen was mentioning, is actually all of the IRA accounts listed out. So it makes the titling just a little bit long. We'll kind of talk about that in one of my other questions that I have. But it makes the titling a little bit long, but it does allow you to actually divide up the percentages of ownership on an investment. So say my Roth IRA could own 50%, my HSA could own 10%, my other IRA could own the other 40%. And it allows you to grow multiple buckets of money all at the same time. And you can do it this way for either promissory notes, loaning out your funds, or even purchasing a piece of real estate. You can divide it up between, different IRA accounts. It's really only the private entity investments that they each need their own set of investment documents, just really kind of based on how those deals are structured. So great clarification there. I always like to talk about that type of structure there. We've got another question from one of our attendees, Michael Drake. Lee Rander, I will direct this one towards you. It's actually one I also had on my list. But Michael would like to know, do you have to have all of the money in the IRA in order to be able to purchase the property? The way I had mine questioned was, can you get a loan to purchase a property with your IRA? Lee Rander, walk us through that a little bit.
Absolutely. So yeah, so you can definitely take out a loan to purchase property. This specific type of loan is a non-recourse loan, and what we're looking at there is definitely something different than you would have as a your conventional mortgage that you would take out to purchase a home at a personal level. So the non-recourse loan basically consists of what happens if you stop making the payment. So if you were to stop making the payments in your IRA, the lender could take the property, right? And so there's no recourse towards your IRA or you personally, right? So when you're borrowing in your IRA, you're not signing any sort of agreement to back the loan. So you're not signing any sort of guarantees for the loan at a personal level. It's totally an asset-based loan, which will be held in your IRA. So yeah, that's one option. You can definitely partner with another IRA. That's something on the table. But as far as initially, yeah, those are some of the options.
Yeah, so non-recourse loan is definitely a term that you want to have on your radar if you are looking to purchase real estate with your IRA, because it could be a great way to leverage the funds in there. Lee, just to kind of follow up on that question, are non-recourse loans easy to get? Are they hard to get? Does it vary on the type of property? Walk us through that a little bit.
I would definitely say it varies on the type of property, just because every lender has their own set of criteria that they're looking at, just as you would outside of your IRA, right? So there's definitely a number of lenders out there. You can definitely do a little, Google search to look around. Some of them actually attend a lot of our events, and you can kind of see them on our YouTube page. So yeah, definitely reach out to them. Some big ones are NASB is a big one, but of course you'd have to do your own due diligence on that lender for sure.
Always, yes. Do your own due diligence. Love to continue to throw that in there. But yeah, so North American Savings Bank has actually spoken at several of our events. They sponsored our Quest Expo back whenever we were able to host that last year. But it's great to kind of watch those presentations to see the actual type of properties that those types of lenders will loan on. That way, if you are looking to do this with your IRA, you kind of have an idea of what your full range of options are there. Now, Alexis, I'm going to. Oh yeah, go ahead.
Just as the lending department, interesting fact is that an IRA can also lend to an IRA. So if your IRA does not have enough funds, and somebody else, obviously not a prohibited party, who wants to lend you the money, your IRA can absolutely lend money to a buying IRA. So again, don't go through prohibited people, but you can absolutely use IRAs with IRAs and go that way. We see that quite often, if not a lot more frequently now with everything going on. So just keep that in mind if you're ever looking for a loan, is that you can use an IRA to do that.
Yes, yeah, great point to make there. It actually kind of almost leads directly into my next question that I had for Alexis. And Alexis, dealing in private entities, we see a lot of people that invest passively into LLCs, syndications, things like that. But can I use my IRA to invest into my own LLC? Do you get this question a lot? What is the answer to that question?
Yes, so we do get this question a lot. Oftentimes we will see clients that are trying to invest into a single member LLC. Which it really comes down to who is the managing member of this LLC, who is the person that is, having control over this LLC, making the decisions within it, and are they a non-prohibited person to your IRA? So that's key right there. So unfortunately, you can't really invest into an LLC that is single member that you're managing directly yourself, or say your wife is, or husband, son. But if it is a non-prohibited person, then yes, you may.
Yes, and just to kind of piggyback off of that, I love throwing you guys all like the tough prohibited transactions questions. But just to piggyback off of that, the golden rule with IRAs is that you cannot personally directly or indirectly benefit from your own IRA investment. So, beyond those black and white rules right there, investing into your own LLC would clearly kind of benefit you personally. We get a lot of people that call in and ask, they're like, well, what if so-and-so is a managing member? What if they only own 9.9%? At the end of the day, it's always going to come back to that golden rule. You or anyone who is a disqualified person to your IRA cannot commingle their funds with that investment and cannot personally benefit from that deal. But again, call an IRA specialist. Will answer all of those questions for you. Especially if you have specific scenarios that you're thinking of doing, we can definitely tell you if it's allowed or if it might fall in a gray area or even just directly prohibited. All right, Lee Rander, let's talk real estate a little bit. So some really common questions that we get here is, we'll have a client call in, and this one's actually not on my list, but I think it's a good question. Say someone calls in, they're like, hey, Lee, I just got a property under contract. It's currently under my name, but I want to buy it in my IRA. Is that possible to buy that property in my IRA, even though the purchase contract might be under my own personal name?
Yeah, no. So I definitely get that question quite a bit, just because our clients are kind of searching for properties day to day, and they find a good deal and they say, hey, this would be a good fit for my IRA. So in that case, all we would need here at Quest is an amendment to the contract, right? So an amendment to the contract updating both the buyer's name and the buyer's address, which will be your IRA's full legal name. And then, of course, you'll use our Houston address on that amendment. So as long as we have that document plus the contract, we're good to move forward in putting that that deal in your IRA. So
Perfect. Then, sorry guys, can you still hear me?
Yeah.
All right, we're good. Microphone just fell. All right, we're good. Perfect. So Lee, I've got the contract. It's amended. It's now in my IRA's name. But how do I handle the earnest money? How do I handle this process?
Sure, not a problem at all. So like most investments and transactions, in addition to supporting documents, which would be that contract, you'll fill out our direction of investment form for real estate. And like most investments, we'll need your approval signatures on that actual DOI, right? And the contract. So we'll get your approval signatures all online. We make that really easy for you. And from there, we can issue earnest money or an option fee based on that contract that you have in place. So both documents will have the same information, our internal form, and of course that contract. And again, as we talked about before, the big thing for us is just getting the buyer's name and the buyer's address correct that first go around. It'll really save you a lot of time. So.
Yes, yeah, great information there. And what I always suggest to clients is, once your account is open and it's funded, you've worked with your IRA specialist to get everything open and moved over. Once you are starting to look for a deal, go ahead and give us a call. Let the front desk or whoever answers the phone know that you're looking to do your first investment with us. We will, at that point, connect you with someone in our transactions department that can help to walk you through what will actually need to be submitted to us for an investment. Because, to be honest, it's not overly complicated, but there's always a first time for a new process, and we are definitely here to help out with that. But kind of on that note, let's talk a little bit about the time frames. Alexis, let's say I've got my account open, I've got it funded, and I'm ready to now invest my IRA, say passively, into an apartment complex syndication. Realistically, what timeframes am I looking at to get this deal funded? And are there any things that you might commonly see that might hold up the time frame of the investment funding?
So I really think that the time frame really does come down to communication between the client and that processor that's in private entities. So once we do receive all of the documents that we are needing, so for in this instance, a company agreement, subscription agreement, and our direction of investment for private entities with that private placement instruction letter, that processor is going to review those documents, make sure that all the Quest vesting information looks good, just read over those agreements and just make sure we have everything that we need in order to process this investment. And from there, it would take 24 to 48 hours to get that funded if everything in those documents looks good and we don't need any corrections. Now, if there are corrections needed, then that's where that timeline may, change a little bit. And that's just more on the other side of how long it takes to get those corrections back.
Yes, definitely. I think that's also such an important thing to, make note of there is that our processing time is 24 to 48 hours from the time that we have everything that we need. Kathleen, there's something that we often refer to called a read and approved signature. What is a read and approved signature? Where does it need to be? And what happens if I maybe miss a read and approved signature for my investment documents?
Yeah, so read and approved signature is literally what it just sounds like. I have read the documentation and I approve for Quest to use these for funding. The ones that we require a read and approved signature on is all of the documents that we require at Quest in order to fund the investment, along with any additional documents that require a Quest authorized signer's signature. If, let's say, on your contract, there is an initial, we will require a client's initial to state that you are allowing Quest or an authorized signer of Quest to initial for you. So anywhere that requires a Quest signer, or if it's a required document, those are the main times we will require a read and approved signature. Even on servicing docs, loan servicing docs, or on your real estate, what is it called? The rental agreements, anything that requires any type of signature from Quest is going to ask for a read and approved signature.
Yes, and it's so important, and that lets us know that you have hopefully at least read and approved those investment documents for your IRA. Quest basically does everything at our client's direction, and in order for us to be able to process any sort of investment, payment, expense, anything like that, we have to have your signature on that document before Quest can actually sign off on the behalf of your IRA. So making sure you get those signatures, giving us a call before you get into that investment, it really just helps to streamline the process, help everything go smoothly. And worst case scenario, our transaction specialists are here to help to walk you through that process. Now, say I've submitted my investment documents and I missed a read and approved signature, and actually I'm kind of asking this personally for myself as well. I know we used to be able to upload it to our Adobe Sign system and send it out to the client. Are we still able to do that? Has anything changed with that? Just so myself and everyone else is aware. Kathleen, go ahead and continue to answer that.
You definitely can. Sorry. She's coming in and chiming in.
Hey, future IRA specialist.
Yeah, she's an IRA specialist as well. You definitely can. We still upload all of the documents over. Essentially, any corrections that we may notice, let's say on a direction of investment form, you may accidentally have made a typo and you've authorized us to go ahead and send you an Adobe Sign link. You can make a correction. You can initial next to it. You can reinitial a read and approved signature. Also, along with that, just keep in mind, we don't take electronic signatures outside of Quest. So anytime you do sign an electronic signature that's read and approved, we'll resend it to you via Adobe Sign. That's part of your security. That's to ensure that you signed it. It's not a hack. It's not a random person signing a read and approved. That's for your security, that and we know that you've read it as a client and that you approved it. So we will send it to you, and it will have to be an email address that is on file. So if you send it over to us, let's say for instance with your Gmail account, but your Yahoo account is on file, and we see that doesn't match, we'll resend it to you via Adobe Sign to ensure that again is the valid signature, that is the valid email address. So we do absolutely still resend that over to our clients.
Yes, and I love that you pointed that out, because you guys might not see it all the time, but we do actually have several advanced security measures internally here at Quest. All of our stuff is encrypted. We actually have a way for you guys to upload all of your investment documents encrypted directly, securely through the client portal. So, if you are one of those people that doesn't want to put that information in your email, which emails get hacked, it happens all the time, we do have measures and processes in place where not only do we internally review it in our transactions team, but it then goes through quality control, and we have other encrypted secure measures as well, such as several of our features through our client portal. Which brings me to my next question for Lee Rander. So, the client portal, really great resource. We have a feature through there called Expense Pay. Say I have a real estate property in my IRA and payments need to be sent out. Say a contractor needs to be paid. What's the easiest way for me to get those paid? What's the time frame? How would I do that?
Absolutely. So as you mentioned, expense pay would be your go-to. So you've already purchased the property. It's already in your IRA. You have access to your online portal. All we would need is an actual invoice from that contractor. And you would just upload that PDF to expense pay, fill out the information, telling us, hey, are we sending out a wire? Do you need a check? Do you need a cashier's check? So you'll just let us know all that online. And actually for checks specifically, they are free anytime you turn in expense pay online. So that's really helpful for you. The turnaround time on that is, as most things here at Quest, is 24 to 48 hours. So
Perfect. Awesome. Whoops, my laptop just died, y'all. Give me 1 second. Let me pull up the chat up here. All right, perfect. We're going to test my eyesight right now. Lee Rander, got another question from you from one of our attendees. Sure. Rob wants to know, what if earnest money was already issued via check in my personal name, but I want to actually buy this property in my IRA? How does that process work?
Gotcha. Yep. So good question. Of course, we always like to emphasize we really want it all to come from the IRA, right? But in this case, you found a property at a personal level. You've already amended the contract. Now it's in your IRA. You filled out our direction of investment, all that good stuff. All of the internal stuff here at Quest is all taken care of. Now, the big thing here is that you communicate to your title company because they'll actually help with the correction, right? So what they'll allow us to do is to issue those funds from your IRA to the title company, and the title company will in return refund your earnest money, right? So again, it's really, really dependent on that title company that you utilize, but we'll be more than willing to kind of help throughout the process. As Alexis mentioned before, communication, right? So you want to make sure that we know, the title company knows of the issue, and we're all on the same page. So definitely a fix, and we can get that taken care of for you.
Yes, definitely. And Lee, you've actually told me this in the past. You guys, if you're buying a property with your IRA, be sure to let your title company know that you are purchasing this property with your IRA, because it kind of happens sometimes where we get to the final, we're about to fund this investment, and there's the whole story has not quite been communicated. So, keep the lines of communication open, keep checking your emails. Our staff is very responsive, but, ultimately as the client, it is your responsibility to make sure that you are getting the right things to us, communicating the right information to your title company, and then we'll kind of work between you guys to make sure that we get that deal funded with your IRA once we actually have everything that we need. All right, so let's go on to our next question. We have another question from an anonymous attendee. They want to know, Alexis, could you just kind of briefly explain what exactly is a subscription agreement?
So a subscription agreement is typically going to be that agreement between you and, say, that LLC or whatever that asset is that you're investing into. And it's going to be stating what it is that you are subscribing to, how much you're subscribing. Say I'm wanting to invest $100,000 into this LLC. This is going to be that document that's stating that, and what the price per unit is in that LLC, exactly what it is that you're investing into as well. So it's definitely a really important agreement to read over, do your due diligence on, because that agreement is going to be stating what you're subscribing to. So that's really the main thing that you see within a subscription agreement. You're also going to be providing your Quest vesting information for that subscriber information for your investment, excuse me.
Yes, and that actually leads me right into my next question that I did have prepared for you. So, that subscription agreement, there's a few pages where you fill in a lot of information, your name, address, social security number, tax ID number. On those documents, do I use my own personal information, or is there specific information from Quest that I should be putting in for that subscription agreement?
So for that subscription agreement, when you are completing the investor information, you're going to use that Quest vesting information. So instead of, Alexis Ledbetter, I would be putting Quest Trust Company, FBO, which stands for the benefit of, Alexis Ledbetter, IRA, and then my account number. I'd also be using our Houston mailing address, as well as our tax ID number. Now, if you have already applied for your own EIN number for your IRA account, you may use that as well. But oftentimes with these private entity investments, our clients are using our tax ID number, which you can find on our website.
Yes, and I love that you mentioned that because we actually have several different resource pages on our website that walk you through the exact investment process. The direction of investment forms can be filled out directly right there through the website, and you can find the other information like our tax ID number, what exactly needs to be submitted to us. If you go to our website, just questtrust.com, if I was better at multitasking, I would share my screen and show you guys. But if you hover over the investments tab, there's actually a drop down that pops up, and you can click on each of the different investment types, and it gives you all of that information right there. But again, give us a call, we'll walk you through it. Or we actually do have a really nice chat feature through our website where you can chat live with an IRA specialist at any time during our normal business hours. It's a great place to get those quick questions answered and kind of help to direct you in the right direction for whatever you might be needing on our website. So it's a great feature there, but let's go ahead and keep on moving along. Let's talk a little bit about fair market values a little bit. So we are in that magical time of year where your fair market values for your IRA are due on January 15th. Now, to kind of start out, give us a bird's eye overview. Lee Rander, what is a fair market value? Why do we need it? Why is it so important that Quest gets this information?
Sure. So one of our roles is to actually report each year what the fair market value is of every single investment that you have in your account. So it's a reporting thing from our side that's required by the IRS. So for a real estate investment, again, where your IRA is taking title, your IRA owns the real estate. So all we would need is you would fill out one of our internal forms. I would just call it FMV form, and then you would add supporting documents. The popular document to kind of submit to is just the tax bill. Really easy. That's free of charge. If you happen to have a realtor who can send in, an actual appraisal of the property. And the next option, as we mentioned before, which is an appraisal by a licensed appraisor. So those are pretty much your three, options to kind of submit your FMV with. For real estate.
Yes, definitely. Kathleen, could you give us a brief overview? If I have a note in my IRA, do I need to submit a fair market value for this? What supporting documentation might I need for a note fair market valuation?
Yeah, absolutely. Just like Lorinda said, any asset that's within your account requires a fair market valuation. So as far as promissory notes go, it's super easy, super simple. I always tell my clients, save yourself a little bit of time and go on your online portal. It's literally so easy. You go in, and when you go into your investment section, it'll have a little orange box that says an orange exclamation mark, and it'll say required. You go in there, you click on it. All you have to do is update the remaining principal amount of that note. And update and upload either a copy of your promissory note, if it's an interest only type of payment, or a balloon payment type of note, or if it is an amortized note, it's the only time we'll require an additional supporting document, which is your amortization schedule. It's really, really, really easy to do on your online portal. It takes about less than 5 minutes to do, and it gets updated a lot quicker. And so if you have any questions, on how to get that calculated, or you need a statement in order to calculate your own fair market valuations, let us know, and we can send you a statement of that investment, and you can calculate what the remaining principal is. Unfortunately, we can't really calculate that for you, just because Quest can't provide any tax, legal, financial, or investment advice. So, but we will give you a statement. You can definitely look into it and then update the value accordingly.
Just to jump back in there, Kathleen, back on the real estate supporting documents for the FMV. So it's a broker price opinion, a comparative market analysis by a realtor, or the tax appraised value, or an actual appraiser by a licensed appraisor. Just wanted to touch on that again, just to make sure you guys caught that. So yeah.
Hey, Lee, question on that one. If I'm a real estate agent myself, can I pull my own comparative market analysis for my FMV?
So unfortunately, as the IRA account holder, you can't actually provide your own IRA with the fair market evaluation supporting documents. But just as we talked about, as far as a prohibited party, anyone who's not listed as a prohibited party can submit that CMA or the broker price opinion to kind of, meet that requirement for your IRA.
Definitely. And last but not least, Alexis, if I have a private entity investment in my IRA, we actually have a good question from Sabrina. How are the FMVs determined, like the value, and what supporting documentation would I be able to submit for a private entity fair market valuation?
So fair market valuations for private entities are usually pretty simple to obtain. So oftentimes you will just need to get in touch with the managing member of that company, and they'll be able to provide you with either a letter that they've signed off on and stated that updated fair market value of the asset, or they can even give you a financial statement and we'll accept that as supporting documentation. Now, just like with real estate and promissory notes, you will also have to complete that fair market valuation form, our internal form. So.
Awesome. Great information there. And just to add to that, for private entity fair market valuations, we see it in a lot of cases where we might have several clients invested into one private entity together. For those syndicators or managing members for that deal, it is so easy. Literally, all you have to do is create a spreadsheet with all of the IRAs invested in your deal and the corresponding values, and we can actually use that as the supporting documentation for every IRA that's invested with you. So if any of you guys are the syndicators out there dealing with a lot of Quest clients, that's a really easy way to get that done. Now, Christopher, I see your question here. Will you have a recording of this available to be posted after? Yes, this will be recorded and saved both on our Facebook page and our YouTube page. Just kind of wanted to throw that in there one more time. And Rodney, I believe, Rodney says, I'm having trouble uploading multiple supporting documents to my FMV. Please advise. My piece of advice here would be just email them to fmv@questtrust.com. Or Evan, if you can put this in the chat, you can go to our secure document upload, which is upload.questtrustcompany.com. So a great way to upload both of those there. If for any reason the client portal is giving you trouble, just email it or upload it through there. Now, I do have a question from Gerardo that I want to mention. If there is a single family, if I'm looking to buy a single family property with my IRA, can I sell it to myself a year later to live in? Lee Rander, do you want to give us some insight on this one? Oh, you're muted. Yeah, there you go.
Gotcha. And so to make sure I caught that, did you mention that you want to actually live in the property?
Yes, so he wants to buy it with his IRA now and sell it to himself a year later to then live in the property. Can I do this?
So no, you can't do that. That wouldn't work out. But something that's very common is to actually to take the property out of your IRA. If you wanted to say, take advantage of the property, you can actually distribute the property just as you would cash, right? So you could pull cash out of your IRA. You can pull an actual property out of your IRA. And so from there, basically, we would go through the same process of just redeeding that asset to yourself. We have an entire team that's kind of dedicated to that. That's our special services team. So something that we could figure out for you, but the straightforward answer is no, you can't utilize the property while it's currently held in your IRA.
Yes, and super important to note there. I feel like I say that about everything you guys have said because it's all important. But the only way to get an asset from your IRA's ownership into your own personal ownership is to distribute the asset. You can't sell it to yourself. You can't trade it. Can't do any of those things because that does fall under a prohibited transaction, unfortunately. But we have actually seen people do this as a strategy, maybe for a home that they actually maybe eventually want to retire in one day. Maybe they buy it in their IRA now, extra points if you buy it in a Roth IRA, because if the Roth IRA, if it's a qualified distribution, meaning you're 59 and a half and you've had the Roth IRA for 5 tax years, you could essentially distribute that asset or that property to yourself completely tax and penalty free. So Gerardo, something else to consider here is if you are looking to purchase this property with your IRA with the intentions to maybe distribute it to yourself at a later time, you want to make sure that if it's a qualified distribution, that you're 59 and a half. Otherwise, if you are under the age of 59 and a half, it will be taxed as ordinary income and have a 10% penalty. So just kind of another layer to add there. But great question, and it's always great to kind of review those prohibited transactions just one last time. Now, we have pretty much made it to the end. I think we've gotten most of the questions answered. If I have not answered your question, it's probably just because it's a little lengthy. Christopher French, I've made note of yours. We'll give you a call. That one's just a little complicated, but that's okay. But before we wrap it up today, I want each of you to kind of maybe take a quick minute and give our audience your best piece of advice for being successful with your retirement investments, having things go smoothly. Lee Rander, I see you nodding. Let's go ahead and go with you first. What's your kind of last piece of advice you would like to leave with all of our viewers today?
So I would say just having a strong grip on your IRA's legal name and address. As long as that's on all of your investment documents, it'll be extremely smooth in the real estate department. One thing to think about too, when your IRA takes title to a property, it's an active investment. It's not something passive. You will be along the way throughout the entire process. If there's an agent involved, it'll be Quest, you and your agent. Once the title company is involved, of course, we're all working together to kind of have the same common objective, from the initial purchase throughout the life of the investment. So we'll definitely be here to help. But I would have to say the top thing to kind of make sure things go smoothly for you is to have that vesting where your IRA's legal name and legal address on all documents submitted to us. So just keep that in mind.
Yes, definitely. Great piece of advice there. Kathleen, what's your kind of last final comments to or piece of advice for everyone out there watching today?
My advice, honestly, would just be reach out to us because it's self-directed. It's different with every single investment. So it's always best. And I always tell my clients, call us, let us know, hey, I have this deal going through. This is what I'm essentially planning. Am I on the right track? What we hate for it to happen the most is like, everyone thinks they have the right documents. They get it in. They're like 24 to 48 hours. Oh, the vesting is correct. Oh, yes, and then come forward. Oh, you're purchasing an existing. We need additional documentation. And then boom, all of a sudden we're delayed behind time. Give us a call. Our notes specialists, we're glad to listen to what type of investment you guys are planning on doing and giving you guys the proper documentation that we'll require in order for you guys to get that achieved in a relatively quick time. Like we were mentioning, 24 to 48 hours is our turnaround time, and we aim for that. And we want to get it out as fast as you want to get it out. It's better for us. It's better for you. It's better for everybody all around. So we definitely want to do that for you guys. Just give us a call. Let us know. And then one thing I did want to go ahead and just mention, in case there's anyone who's not familiar with the vestings, there are a few different vestings you want to keep an eye out for. If you're using your HSA, if you're using your ESA, if you're using a beneficiary IRA or a 401k, anytime you're using any of those types of accounts, you want to definitely ensure that those vesting is correct because it does vary a little bit. So if you're using any type of those 4 accounts, give us a call. Make sure you guys have the correct vesting on there, and we'll go through it with you. You can always send in your documents for a preliminary review before you even start it. It can be completely blank and just say, this is kind of what we're going for. This does look like we're on the right track for what we want to do. We can't provide you legal advice if it's structured right, but we can tell you if it's drafted in the way that we would be able to accept it.
Exactly. Great piece of advice there. And that does actually remind me of one more thing that we haven't really mentioned since we're focusing on transactions today, but that is to also be aware of the time frame of how long it takes to establish an account at Quest and then actually get your funds moved over. Because sometimes the biggest holdups that we have are actually receiving your funds from your current custodian. Opening up your account, very quick, again, 24 to 48 hours, but moving your funds over from your current custodian could take anywhere from 3 to 5 days to 3 to 5 weeks, just depending on where the funds are coming from. So if you have this in mind, if you think you're going to be doing it in the near future, go ahead and reach out to us, get those first steps started. That way we don't miss your investment deadline because we're still waiting on your funds to arrive at Quest. Huge piece of advice there. So thank you for bringing that up, Kathleen.
No problem. If I may add on to what you just said, actually, just tagging along that, if you are in a hurry, option to choose for sending funds wire. Checks have 5 to 7 business day hold, generally 5, but especially with the holidays that just passed, you want to, if you're in a hurry, you need those funds, select a wire with your current custodian so that they can wire over those funds. Some custodians do not allow wires. So you definitely want to make sure what your options are with your current custodian. If that is a check, you definitely want to keep that timeline in mind. It is important because we don't want to call you guys a day before the investment and say your check is on hold.
Yeah, and there's, both with Quest and even in my own personal life, I've noticed mail has been so delayed lately. Like, guys, you don't want to miss it because you selected check instead of a wire. It's a $25 difference. It's not even that big of a deal. But Alexis, if you had one last piece of advice for all of our viewers and attendees today, what would that be?
So I'll play off a little bit of what Kathleen was saying. Really, as I mentioned earlier, communication's key. I know when you are completing those documents, for example, the subscription agreement, as we were talking about earlier, oftentimes there can be some different looking subscription agreements from investment to investment. So sometimes within those subscription agreements, it'll give you the option to be completing the investor information as a personal person or an entity, and you're actually going to want to complete that as an entity. So really, communication's key. If you ever have any questions when you're trying to complete these documents and wanting to get that done right the first time, feel free to give us a call and we'll be happy to answer any questions that you have or take a look at the documents with you.
Mm-hmm. Yes, guys. Well, great information. It's been so great to steal you away from your real jobs to join me on this webinar today. So I really do appreciate all of y'all's time. I know being supervisors of these 3 departments, we keep you very busy, but it's been so cool to see our client feedback that we get. You guys may or may not know this, but after every transaction that gets funded, our clients actually get a survey. So we actually get to hear the feedback of how awesome our transactions reps did. And it's funny, the IRA specialists, sometimes our job is really hard, opening up the accounts, going through all the hard technical things, but then it's really awesome to see once we've helped you guys get your account open and established that the transactions team just really takes it home from there and gets them funded very quickly for you guys. To be honest, I probably couldn't do it. I am not the best person with paperwork, but I'm so glad to have all of you on our team and that you are helping to oversee these departments as we help our newer representatives grow and learn about these investments as well. So thank you guys so much for joining us today for this class. Remember, you can rewatch this class as well as all of our others here in our links in the chat. Evan has sent those one last time for you guys. If you are interested in opening up an IRA or setting up a consultation with an IRA specialist, reach out to us, give us a call or shoot us an email or chat us live through our website chat. Super easy to get a hold of us. We're always here to help answer your questions and walk you through anything. And ultimately, the goal is to help you guys build more wealth, be financially free, and that's exactly what we're here to help you guys do. So again, Alexis, Kathleen, Lee Rander, thank you so much for joining us today. And to all of our viewers, I hope y'all have a great day and a great weekend coming up. Y'all have a great day.
Thank you. Have a great day.
Thanks.
Have a good one.
See y'all later.
Bye.